FOMC meeting starts today, which is 20th of September. So let's dive deeper into how market should react and what to expect and how to plan your trades. There are two possible scenarios: 75 bips increase. 80% of the market had already priced this in. The other scenario is 100 bips increase, roughly 20% chances of this happening at filming time. In this video, I will first look into both possibilities and how market would react in either case, and then I'll share my trading plan to make most of this event, where one thing is surely guaranteed, which is volatility. So let's make most of the volatility. First possibility is 75 bips increase. 80% of the market had already priced this in. Of course, ultimately it's the Fed's choice, and that is all what matters, and the only factor that will and is driving the market. If a 75 bips move happens, regardless of you and I agree or not, we will see some green candles forming immediately on the chart as soon as Jerome Powell starts taking Q&A from the press. But of course, it's not my prediction, but Powell's replies that would dictate the market, so do follow him closely. At filming time, the markets think that Fed rates will end the year 2022 between 4 and 4.5%, which could mean that the last two meetings of the year will see smaller rate increases than we have seen recently. It will be interesting to see if the Fed disagrees with what the markets think will happen. More interestingly, until August, we were considering an increase of either 50 or 75 bips point in September, but today we are talking about either 75 or 100 bips increase. Now, this is more of a trick on Mr. Powell's part. This gets without saying that the Fed would not stop balance sheet tightening at any time soon. Even if it's 75 bips increase, we will still have some good opportunities on hand. As an example, you can identify the trend and place 3 to 4 of your favorite indicators in position, and then you can open short or long positions. I will certainly do that. Or for long-term gains, you can buy on the spot market when the prices are low. But do wait until there is a clear evidence that the trend is changing, and then you get ready to buy long positions along the line when we are seeing green candles. I don't need to repeat this, but I'll still repeat it. Trend is your friend, and you never go against the trend, never. So what to expect? As I said, green candles for a short while, high volatility around Powell answering the press questions. Definitely not the time to enter the market if you're a newbie or not sure what to do. Let the market settle down, identify the trend, and then you take your positions. Now, the second scenario is that the Fed increases 100 bips point. If this happens, we may see more green market. I know it sounds the opposite of what should happen, because higher interest rates scare away the investor, and hence the crypto market should be the last one to see money inflow. But this is what actually theoretically may happen. When there is high rate of inflation, investor wants to pay less money for the stocks or the asset, because the investor would be time valuing his money. So basically, investor needs to use a higher discount rate when valuing an asset, because again, money today is worth more than what it was in the future. But when you have a higher rate of inflation coupled with aggressive interest rate hike, investor takes into consideration that inflation will eventually come down, and then we will see decompression of the asset's value, which is why we may see greener candles for longer. Again, because investors would be confident and clear that the bandage had been ripped once and for all, and Fed is on its way much faster, much quicker towards their ultimate target of around 4 to 4.5% by year end. Now, this would bring back the investor confidence into the market. So again, what to expect? Expect green candles for longer period. If that happens, what you should do: plan your trades. Obviously, that's given. You cannot randomly get into any trade. Don't expect any surprising drastic changes in the market dynamics. However, we may see a better autumn than the summer. Let me know in the comment section what you think about my analysis.